Let's shift focus then to InfoEdge. That's the stock on our radar. The hiring trends and their outlook for 2025 is something we want to discuss. To help us out with that, we have Chintan Thakkar, the whole-time director and chief financial officer at InfoEdge, who joins us on the show. Hi, sir. Good morning and good to see you, Ben. What are the trends looking like? What's the activity you're seeing on ground? And tell us, how is the recruitment space shaping up?
So if you look at InfoEdge on an overall basis, and if you really look at it past 3 quarters, it has been inching up in terms of the billing growth that it has been showing. Last year, Q4 was about 7%, then it went to 11, then it's 14, 16. So I think it's gradual recovery, we are seeing it. And that's across the board. That's whether it's in recruitment business and similarly in non-recruitment business. Both seem to be kind of, there's a broad growth and a broad story in terms of the growth that it has been showing. So when you kind of cut the number and when you look at it from the geography standpoint, large customers, small customers, large developers, brokers, I think all businesses, we are looking at that it's a broader growth story and it's solid. So unless something externally significant happens, we would think that this quarter also should remain consistent to what we have been seeing it in the past.
Okay, all right. Let's get a number then out of you. Recruitment pre-COVID was at around 15%. Do you think for the next couple of years we can average mid-teens?
Past 2 quarters, it has been in mid-teens, and in fact, the non-tech sector has been kind of in higher teens, and IT is gradually inching up, So we are seeing the momentum, and we hope, and we internally we feel that we should move to higher teens, particularly for recruitment business. And if non-recruitment business, which is in higher teens, if it goes into early 20s, I think that would be a good result for us for the quarter.
Okay, so you're looking at mid to high teens. Sorry, I missed that number. So I mean, at a sustained CAGR basis, FY25 to 25 to say 27, 28. You're saying you can do 15%, or will it be less than 15% growth?
I'm just saying for the quarter, if you look at the last 2 quarters, it has been in mid-teens, and we would hope that this quarter the momentum continues and we kind of inch up towards higher teens. It's very hard for us to really predict about what will happen in next 2 years' time, because just like how volatile the stock markets are, the recruitment markets also keep on taking the clues from what's happening in the outside in the economy. And then accordingly, it keeps changing. So I think for the quarter, it seems that given that the past 2 quarters has been very consistent growth, and it's it's kind of a secular growth story. We think that this quarter also should remain consistent. We are seeing the building up in the IT hiring as well as in the non-IT hiring, and we think that should continue for some quarters to come in.
Chintan, on the IT hiring specifically, NASSCOM's numbers for FY25 did look very good. I mean, they're talking about hiring doubling, almost doubling from previous year's levels. And in our conversations, whenever we've spoken to large, IT players, including Mr. Salil Parekh, he's maintained that this AI disruption doesn't mean that less people will be hired. I mean, he was giving emphasis on numbers. But the Naukri job speak index, I mean, I think the readings are a little more mixed. So on the IT hiring front, what are the immediate forecasts you have as we step into the new fiscal?
Well, particularly seeing from the lens of what's happening in AI, we think that jobs at the lower end, which are like customer support and the BPO type of jobs, may see an impact of AI and AI agents. There are many AI agents coming up. So you will see some impact over there. But I agree in general that AI is going to create different types of jobs with much higher productivity, and the same people can handle much more volume. So you will see the productivity gains, and that in fact I would think that some of the internet and e-commerce companies have already started showing some productivity gains led by AI.
No, absolutely. Although the one common thing I've heard, Chintan, hi, morning, Prashant here, is that as everybody learns how to use these tools, right, and some of them are getting scarily good, and everybody is in the phase of learning how to use them. Companies are doing it. Eventually, it'll come to a point where clients large companies who use IT services, Indian IT services companies are going to demand those cost savings, which essentially is going to then, the pressure will come then. Maybe it's not coming now. Do you agree with that, Chintan?
Well, I would say that the productivity gain could be there on both sides. On the cost side, we are definitely seeing that there's some productivity gain. And particularly if you look at, let's say, if you look at all internet and e-commerce companies, after people cost, the second, biggest cost is the marketing cost, is the promotion cost. And we are seeing that the content creation is getting more efficient, is getting cheaper to create. The targeting of the audience is getting sharper and sharper. And as I said that you'll see a relatively, if not in absolute numbers, relatively the cost of marketing going down for some of those internet and e-commerce companies, and we have already started seeing some trend of that. So there will be a productivity gain on the cost side. At the same time, there will be many more opportunities of the productivity gain on the top line as well. Some of the new products that will come that will enhance the top line as well. At the same time, I think a time has come when India is going to build AI in India for India type of technology development that will happen, and you will see a gradual growth on the top line as well. So probably the tech companies will adopt some of the AI things much earlier than the other companies, and you will start seeing the benefit of that on the top line as well as on the cost structure.
We'll just get to real estate in just a bit, Chintan. You must have seen what happened with Technicolor, right? Technicolor India, very unfortunate. The headlines there, some 2,000 plus employees, and it's part of the Paris-based sort of group, and they worked on. They're not exactly IT, but they worked on visual effects, and I think they worked on The Lion King, and really pioneers. And one of the things that they're blaming is AI. Maybe it's a lazy excuse, and maybe they were not badly managed. I don't know. But it's starting to impact lots of areas, isn't it, Chintan?
I don't know particularly about what has happened in this particular case, but there will always be some news items that will say that, look, some people are being laid off. There will always be some good news about saying that more and more GCCs are coming in the country. Right? I was just talking to somebody in US last evening, and I understand Meta is, for example, is going to create a much larger center in India, and so there will always be this kind of churn will happen, whether it's in inter-companies or whether also in terms of what type of roles and what type of positions are getting created. As I said, the lower end will probably see a much more pressure, customer support and BPO type of industry. At the higher end, if you look at the machine learning and the data science guys and the people who are experts in AI, I think their demand is going through the roof, and you might see a kind of a wage hike much more in some of those segments in the days to come.
Okay, all right. Quick question, Mr. Thakkar, before we let you go. The primary market has slowed down a little bit. And because of that, some of these companies' valuations have seen a bit of a contraction. Any kind of write-backs or provisions you have had to make in some of those companies that you have invested in?
No, we really don't see a real pain in some of the startup investments that we have done. I think they are all fairly funded, and they seem to be showing a reasonable amount of growth. So we really don't see anything which is exceptional for us to call it out. If there is something, obviously we'll call it out. We prefer getting the bad news first in the market, but so far we have not really seen any pain in any of the companies.
To write down, mark down any of your investments to a large extent is what you're telling us.
Yeah, there is some small ups and downs that happens with quarter to quarter, and I think that we always do it, but I really don't see anything significantly changing.
Okay, all right. What about how's the real estate market? What kind of what kind of inputs have you got? Is there any kind of slowdown out there, negative wealth effect? Is it plaguing the industry, or is it as good as it was in the past? Because out there, the losses had come down drastically for 99 acres.
Yeah, I think the real estate market seems to be steady. Maybe in the luxury segment, there could be a little bit more pressure. We have seen many launches happening in the past few quarters, in the luxury segment. But at the mid segment, and probably that's kind of more relevant for us, I think market seems to be steady. The reduction in the cash burn that we are talking about is actually the efficiency that I just talked about. Because of the marketing content is getting cheaper, and we are getting more and more efficient in how we kind of market ourselves. So you can see that the marketing cost relative to the growth in the top line is kind of coming down. And the same thing we are seeing in other businesses. For example, Jeevan Sathi, we are seeing a similar kind of a trend. And that's the efficiency that I have been talking about.
All right, we'll leave it there, Chintan. Great speaking with you. Thank you for your time.
Thank you.
Appreciate it very much here on CNBC TV 18.